Hey there, and welcome to this explainer. Have you ever actually stopped and wondered what it truly takes to be the master of your own retirement? Well, our main goal today is to give you a really clear, foundational understanding of self-managed superannuation funds, or SMSFs as we usually call them. If you're thinking about taking absolute control of your retirement savings, you are definitely in the right place. We want to make sure you have all the essential facts laid out plain and simple, so that when you sit down for your one-on-one assessment, you're arriving fully informed, confident, and ready to ask the exact questions that matter for your unique situation. Now, this explainer is brought to you by Wendy Jimenez, an accredited SMSF specialist over at Wendy Super Accounting. And the philosophy driving everything they do is pretty straightforward. Clarity creates confidence. The firm specializes entirely in SMSF education and compliance. Look, they completely get that the whole world of superannuation can seem, well, incredibly complex. But by breaking it all down into clear, manageable concepts, they really empower you to make informed decisions. Because at the end of the day, when you truly understand the rules, you gain the confidence you need to take control. All right, so here is our educational roadmap for today. We're going to compare superannuation systems, look at setting up your SMSF, dive into property investing, navigate the rules of borrowing, and finish up with a reality check on your compliance responsibilities. Let's jump right in. Section 1, Superannuation Systems Compared, the Catalyst for Control. Okay, before we get too deep into the weeds, I do need to make a really important distinction. This explainer provides general educational information only. It absolutely does not consider your personal objectives, your specific financial situation, or your individual needs. We're just here to learn the framework today, not to give out personal financial advice. Make sense? Awesome. So think of an industry fund kind of like riding on a train. It's this done-for-you system where the trustee is driving and you literally just pick a destination from a menu of options. But with an SMSF, you're stepping right into the driver's seat. You get total control over those investment decisions. But, and this is a big but, that control comes with a massive trade-off. You are now assuming the legal responsibility. You legally have to comply with superannuation law and actively maintain an investment strategy that looks at risk, return, diversification, and liquidity. So it's a huge shift from being a passive passenger to an active pilot. Now, while the system is super flexible and you can easily roll over your funds from an industry fund to a new SMSF, you really need to hit pause before you just go and close your old account. First things first, you've got to deal with your insurances. Life and income protection insurances are very often tied directly to your industry fund, and if you close it, poof, you might lose that cover entirely. Secondly, if you've actually made personal deductible contributions during the financial year, do not close the fund until you secure your Notice of Intent, or NOI. If you move the money before doing that, there is a good chance you could lose the ability to claim those really valuable tax deductions, and nobody wants that. Section 2, Setting up your SMSF, Building the Foundation. The magic number here is 6. An SMSF can have up to 6 members. Now, you might be thinking, well, what happens if these members have completely different account balances? Don't worry. General income and expenses are distributed proportionally based on each person's balance. On the flip side, specific things like contributions or insurance premiums go directly to that relevant member. And to keep everything above board, every single year, an external auditor comes in to review these allocations and make sure they're absolutely accurate. I know it sounds like a lot of math, but with the right accounting software, it happens seamlessly in the background. Actually building this foundation involves some very concrete steps. Step 1, we establish a corporate trustee, which basically means all the fund members become the directors of that company. Step 2, this brand new legal entity needs its very own dedicated bank account. Seriously, there is absolutely no mixing of your personal money and your super funds here. Zero. Finally, the fund has to be registered so it gets its own Australian business number, tax file number, and an ESA. Speaking of ESA, that stands for Electronic Service Address. You can basically think of it as a digital mailbox that the tax office requires so they can facilitate secure messaging for all your contributions and rollovers. I know it sounds highly technical, but the really good news is that specialists like Wendy Super Accounting just handle all these complex registrations right on your behalf. Now, I do have to stress a bit of a harsh reality check here. Not everyone is legally allowed to run an SMSF. Every single trustee is required to sign a formal declaration acknowledging their legal responsibilities. If you happen to be an undischarged bankrupt individual, or if you've been convicted of an offense involving dishonesty, the law considers you a disqualified person, and you simply cannot act as a trustee. No way around it. And furthermore, even if you pass that test with flying colors and you hire the best accountants and auditors to help you out, at the end of the day, you remain personally, legally responsible for making sure the fund actually complies with the law. Moving on to Section 3, Investing in Property, the Strategy. Okay, we absolutely must talk about the golden rule that governs literally everything you do in this space, the sole purpose test. See, while an SMSF gives you amazing freedom to invest in things like shares, managed funds, crypto, and property, every single investment, without exception, must be maintained strictly and exclusively to provide retirement benefits for the members. Period. End of story. And that brings us to a really critical distinction when we start talking about buying property. If your SMSF buys a residential property, the rules are incredibly strict. You absolutely cannot buy it from yourself, you can't buy it from a related party, and you definitely cannot rent it out to yourself or your family members. It has to be a strict arm's length transaction. But if your SMSF buys a commercial property, a really fascinating strategy opens up. Your SMSF can purchase commercial premises and actually lease it right back to your own business. The catch? The lease just has to be set on strict commercial arm's length terms. As you can imagine, it is an incredibly powerful strategy for business owners. Section 4, Borrowing through your SMSF, Navigating complex rules. So as a general rule, borrowing money inside an SMSF is strictly prohibited. You just can't do it. But there is one highly regulated exception, and it's called an LRBA, or a limited recourse borrowing arrangement. Under this specific setup, the cash you already have sitting in your superannuation acts as the deposit for a property. Then, a lender provides an LRBA loan for the remaining balance. After that, the loan repayments are generally made directly from the SMSF's own cash flow, which includes the rental income you get from the property and any future super contributions you make. Now, because you're playing with borrowed money, the law requires us to super protect your overall retirement savings. We do this by creating a legal structure called a bear trust. I love to think of this as an impenetrable bubble of protection wrapped right around that specific property. If things go completely wrong and you default on the loan, the lender's recourse is strictly limited to that single property inside the bubble. They literally cannot touch your shares, your cash, or any other assets held in your SMSF. But here is the thing. Timing is absolutely critical. I can't stress this enough. The LRBA and the Bear Trust documentation must be correctly established legally before the property acquisition is completed. If you get the timing wrong, the entire structure can fail. Oh, and a quick fun fact for you. You can borrow money to repair a property inside the structure, but you generally cannot use borrowed SMSF funds to drastically improve or change the fundamental nature of the property. So again, timing and rules are literally everything here. Section 5, Compliance and Responsibilities, the Reality Check. I actually want to read this quote to you directly because it is the absolute golden rule of this whole shebang. The money belongs to the SMSF and must only be used in accordance with superannuation law, not for personal expenses. Gaining control of your superannuation does not mean you suddenly have a personal piggy bank. Every single cent must be accounted for and used exclusively for the fund. Think about it like this. Running an SMSF is basically running a business, and it comes with real business costs. We're talking ASIC fees, accounting fees, mandatory external audits, and ATO levies. On top of that, you have to be incredibly meticulous. Every receipt, every lease agreement, loan document, and bank statement must be perfectly filed for your auditor to see. Every single transaction flying out of that dedicated SMSF bank account has to be supported by a paper trail. But listen, if you do all of this correctly, the rewards are absolutely fantastic. If your SMSF holds a property for more than 12 months, it may actually be eligible for a 1/3 capital gains tax discount. And it gets even better. When you eventually move into the retirement phase, the assets supporting your pension might be entitled to massive tax concessions, potentially even a complete exemption from capital gains tax. So yeah, this is exactly why doing the hard work and maintaining strict compliance is entirely worth it for your future. As we wrap up today, I just want to remind you once more that every single person's circumstances are uniquely different. Making any decision about establishing, investing through, or winding up an SMSF is a massive life choice, and it really may require licensed financial, legal, or taxation advice tailored just for you. Well, thank you so much for joining me for this explainer. I really hope you now feel a lot more informed about the mechanics, the strict rules, and honestly, the incredibly powerful opportunities waiting within an SMSF. For personalized guidance regarding your own SMSF compliance obligations, please reach out to Wendy Super Accounting at wendysuperaccounting.com.au. Remember, Clarity creates confidence. So as you look at your current superannuation statement today, I want to leave you with this question. Are you ready to finally step into the driver's seat and take true control of your future?